We are preparing to live stream. We got some friends waiting in the waiting room. Healthy hair connections, style, beauty, and beyond. I see, and then Chris Style aesthetics or athletics, I apologize. So just in the beauty world, there are already some connections that can be made. We are, all right, we are all set on the live. We're gonna go ahead and get started. It is Ernst and Young Connect Day 2021, and we are so super excited. We are completely honored that they have come on board to host us, to lead us around all things financial literacy. We know at Corner to Corner as entrepreneurs, getting the money right, to use our lingo, and then also knowing how to keep that money flowing once we get started is a challenge. But we do have the professionals here with us today, and we are honored to learn from them. If you are just now hopping on, whether on the live stream or in the actual Zoom, this is going to be broken into two parts. So we have the first session from 11 to 12, and then at 12, we'll start the second session. We would love for you to stay for both because it's going to be some rich information to really take you to the next level as the financial boss that you are. But if you want to go to just one, that's also fine. We just want you to get what you need so that you can be successful in your business. Without further ado, I'm going to pass it over to the experts. I got my notebook ready because I need to learn. So I'm going to be quiet, and the floor is now over to our friends from Ernst and Young.
Thank you, Yasmin. Hello, all. Good afternoon. Welcome to EY Connect Day. I'm very glad to meet you all and introduce my team here who have volunteered to spend their time and also share their intellectual knowledge and experience and exposure they have in the financial world with all of you. And this is not just one time. We may wish to continue this association going forward also. So do not hesitate if you have any questions after this session to reach out to us or one of us here to answer some further questions on this. I'm trying to share my screen, but it looks like, Yasmin, you have disabled that. If you can enable that, I can present.
I apologize. I'd given Jenna the hosting.
Yeah, I will share it right now.
Thank you.
No problem. Okay, since there are very few people in the room or manageable people in the room, we would like this session to be very highly interactive. Oh, you have the presentation. Got it. I have a different presentation. If you don't mind, can I share mine?
Yes, of
course. Oh, Jenna, oh, you were sharing it. I'm sorry. Then you have the latest one. Sorry.
Yeah, I was sharing it. I can share it again.
Okay. I was just wanted to make sure that your edits have made it. So yeah, please go ahead. Yes, please go ahead. Sorry about that. Okay, let's move on. Just want to talk about what is EY Connect Day. EY Connect Day is one day or an initiative. It's a part of EY Ripples, which is a corporate social responsibility initiative of EY, which touches many lives. And if you move on, and you'll see one slide, this year primarily we are focusing on three major pillars in the society. Can we move on to the next slide, where we have the three areas which we are impacting? The next slide, please. The next one. Yeah, this one. So this year we're focusing primarily on supporting the next generation, the youngsters, and we do that through junior achievement and going to schools or working with youngsters a lot. And this is done by many of our EY professionals on top of their day-to-day work. We take it as our corporate social responsibility to make an impact on the society we are living in and our extended neighbors there. So we are focusing, we have chosen three main areas in the year 2021 to make an impact. And one is the supporting the next generation. Second is accelerating environment sustainability. helping any green causes. And the third one is what we are doing today is working with impact entrepreneurs. We call you as, that is anywhere we can work with budding entrepreneurs to help them in establishing their business or scaling their business or helping them with any challenges they have on a day-to-day basis. And getting in to help me with this today's session today, I have fantastic individuals as a part of our team here. And I'm going to introduce them, but I'm not going to disclose their name. And let me see if people are able to guess their names as I complete an introduction here. So I will read their attributes and you can then guess who are they. Let me see if you get them right, and I'll disclose the results in the end. The very first person I want to introduce, this person is usually very busy on weekdays with CrossFit and playing soccer, but on weekends when this person gets time, this person enjoys to hike and read books outside. And if they were not doing what they're doing today, they would be working in a zoo actually. And the biggest, their motto in life is that never travel without a book. Can you make a guess from these people? Who are these? Okay. I will not be disclosing the answers yet, but yeah, keep your answers there. I'll go to the next person here. The next person in our team is on weekdays is very, very busy with clients and working for EY most of the time, but this person also has runs a small brewery where this person, I'm not letting out the gender, so I'm here referring them as this person. So, this person is brewing the beer and running financials for their own company. And on weekends, this person likes to help out with the tap room and does enjoy going out to eat and visiting other craft breweries so that they can learn from them. But if they were not doing what they were doing, they might be brewing something else other than beer, and they might be trying their hands on making wine. And their personal motto in life is chase your own version of success. Anyone take any guesses on who that person is within all of us here? And the third person in the team here is usually very busy on weekdays and very with EY and their work in the tax world and the information technology, and more busy with driving the daughter to and back from school and other activities. On weekends, again, they're busy with driving the daughters to and back from other activities, and also busy with running honey-do and daddy-do lists. If they were not doing what they were doing in EY, then that person would be a teacher, and their personal motto is not that you don't have to make your line look longer by cutting the other line. You just have to make your line longer. The fourth person in the team on weekdays is very busy with engagements, and that involves assessing internal controls and IT risk management. I don't know, you can take a guess on the third one. And this person is busy on the weekends enjoying hiking, reading books, and cooking. And if they were not doing what they were doing, they would be a doctor, a medical doctor. And their personal motto in life is anything worth doing is worth doing well. And the fifth person in the team, I don't have an introduction. So you can take a guess who could be that person. So let's see if you got any closer. So let me reveal the results. The first person was CrossFit and soccer. That's Jenna Bass. Or
Yeah,
maybe
somebody got me right
them...
immediately. I loved that. I also liked how many people said Grayson, because I know him well and he would never do CrossFit.
And maybe I'll now
Or
let
soccer.
them speak and reveal who they were. So Grayson, you can let them know who you were in this description.
Oh, I was the second one. I own and operate Crazy Gnome Brewery as well as working at EY. I see you
And
2 for 2. On a roll.
I'm the third one who's driving the daughters back and forth on weekends and on weekdays. And what about naturally between IJ and Michael, who wants to go next? IJ?
Yeah, I think I was the last person. I'd like to be a medical doctor if I'm not working here. And yeah, I just enjoy hiking as well. Thank you, guys.
And Michael can take the luxury of giving his own introduction now.
Yes, I'm the slacker who didn't submit my introduction, but certainly pleased to be with you all. I similar to Sid, I have lots of weekend parenting responsibilities, driving kids here and there, which I'm sure many of you all can relate. And during the week, I'm a partner at EY, focusing on IT risk, and so certainly pleased that you joined us today, and hopefully we can share a little bit of insight, and also we'd love to learn from you guys too.
So with that, let's get into the agenda for today. We have finished the introductions part of it. There are 2 parts to this whole session. Part 1 deals with covering accounting for growth, which will be covered by Grayson and Jenna. And we do have a question and answer session at the end of it, and we'll have a small break after that. And then the session number, I hate to call it a session, but the next interactive time slot would be the planning for future, where again, Michael, Grayson, and Jenna would step in along with IJ, and I will chip in wherever I can. I'm also here to learn along with you, because my forte is more on information technology and software development. And I'll definitely pitch in wherever I can to address some of the questions you might have. And then in the end, we will have closing comments and would like to hear from you. And we want this session to be highly interactive. So feel free to raise a question whenever you have a question there, and the speakers can take it there from. With this, I would like to hand over the floor to Grayson and Jenna for starting the session on accounting and growth. Here you go.
Thanks, Sid. So yeah, I mean, like Sid mentioned, we definitely have our blocks for Q&A at the end of each of these hour segments, but it's a pretty small group. So, throw questions as we go into the chat, or if you feel like turn on that mic, come on and ask some questions as we go. Definitely want this material to be framed in things that you're interested in. We've been tasked with going through a couple segments that are part of the program that you guys have talked about before. So hopefully these are things that you want to hear from us. And, from my perspective, I'm definitely going to be framing everything within the context of what I've been going through with my own small business. And we can, chat together and go over some questions together. And I think the first one, what I'm going to be talking about is looking at fixed versus variable costs, and then kind of leading that into a break-even analysis. And because you got to understand one to do the other. It's kind of flows there. And when we're thinking about our costs, it makes sense to break things into what you have to pay all the time and what you have to pay in order to make a sale is how I would say it. Another way, and you can see this point at the bottom here that you can think about it when you're first breaking these points down, is if you were to close your business for a week, what costs would you still have to incur, right? Whether or not your shop's open or closed, you still got to pay. You got to pay your rent. Comcast is still going to charge you internet, the same bill, whether you're using it or not. But if you're closed for a week, then anybody you have helping you out in the shop, or any, clean chemicals that you're using, or, beauty products or anything like that, you're not going to be actively using those. And so those are costs that you wouldn't incur if you were closed. So that's kind of a way to think about that. And, it's important to kind of keep the distinction between yourself, because as we're chasing this break even, this first problem that businesses have, which is how do we break even here? You've got your fixed cost bucket. Then as every dollar amount that you sell, you have this variable cost that's like keeping up with you the same way. So you can't say like, oh, I'm just $10 for my break even. Well, if you do $10 more in sales, well, what did you have to spend to make those $10, and I think, with that, we can kind of flip on to the next slide here to kind of take that idea, bring it forward over into this idea of break even. And, it's a great exercise to do when you're planning for your business, but it's something that's so important to keep doing periodically. Personally, at the brewery, I reestablished our break even on a quarterly basis. And it is interesting, when we first opened, we had this number in mind that we had to hit, right? We had to hit, we had to be able to pay our rent. We had to be able to afford the grain and hops and water to make the beer in the first place. And, from that perspective, there was a certain amount of sales we had to hit in order to support the next month of business. And not every quarter is going to be the same. And we'll get into a little bit of what that means, seasonality, and what that means. But we're taking a cost. First, we're taking a cost approach to the break even. And I guess that's what we're trying to say here. I'll pause for a little bit to hear any questions that you might have on how costs flow into a break even before we talk about the other side of it, which is the sales side. Are these sort of things that you guys are thinking about with your own small businesses?
Yes, for sure. And Grayson, I love the way that you're breaking this down, specifically the concept of what do I still have to pay when my business is closed? That's such a helpful way to think about this. So will you share again, what are some of those things, just as some examples?
Yeah. So, when I'm thinking about my own business, rent is the easiest one, of course. Number one, rent. And that one's not even going to change that much. But if I'm thinking, rent only applies if your business is based in a physical location. Maybe you have a landscaping company. Maybe your fixed cost would be the lease on your truck or, the lease on the lawn mowing equipment. A fixed cost would also be some of your utilities. Some of your utilities are the same every month, whether you use them or not. Things like phone, internet. Some other fixed costs could include certain set amounts of taxes that you have to pay. And it's like a fixed variable cost in a way. You might have to pay 20% of taxes. In the alcohol industry, there are a lot of licenses I have to have. So I have to pay, the government $300 for the right to do this, another $300 for the right to do something else. And those are due every year, regardless of how much business I'm doing. We also do live music as well. So I pay a flat fee to some of the music publishing companies. Our insurance, that's a big one, and we'll talk about that in the next section too. That's another fixed cost. And that's a very important one. And I'll fill in a little bit of the background of starting mine up, but having insurance was a very critical part of starting my own company. Variable costs, you know, some of the variable costs are really clear, right? If you are mowing a yard, then the gas that you put into your lawnmower is a variable cost, right? Because if you didn't mow that yard, you wouldn't have used that gas. For me, the grain that I buy to brew the beer that I sell, variable costs. If I stop brewing beer, I don't have to buy any more grain. Some of them are a little more tricky, like the more hours we're open, the more we're running our air conditioner, the more electricity we use. So our electric bill, the more we're doing, is higher. But there's, you know, kind of a floor there as well, where just having, you know, an electric company in general servicing our building has kind of a floor cost. So some of these variable costs are a little sneaky in that regard, where they might be considered a fixed cost. It's kind of up to you on some of these gray areas as to which side you would classify them as. But those are some of the more common examples. Labor. Let's say you're running a hair salon and you're doing a whole lot more business, and you need to have someone else coming in to helping you out. Well, the hourly rate that you pay them, you're only paying them because you're open. So that would be another example of a variable cost. Unless you had someone that was salary, if you're paying that person, even if the shop is closed, a flat rate per year, then all of a sudden you've pushed that labor into a fixed cost. So hopefully those are just some examples that I've seen, and that, you know, that's how I would classify some of the more common ones. You know, how I start this process personally, everything that I do, and this is pretty important, everything that I do for the business comes out of a separate checking account that I personally do not touch. That has nothing to do with my personal life. I've got two checking accounts, right? I've got the one for me, and that's how, like, when I need groceries, when I need to pay my rent for my house, that's coming out of that checking account. When the business needs to pay its rent, when we need to pay our employees, when we're making money, that's coming out of that checking account. It's really simple. Every month, and Jen is going to touch on this, but when you're thinking about what your costs are, look at your bank statement. Where is your money going? You know, maybe you're thinking, oh, that's not really an expense, but it's a consistent $20 every single month. Well, that's going to keep happening, right?
I'd also like to note on that, not just from an accounting records keeping perspective to help you with budgeting, like Grayson was just mentioning, but that's also very key for filing your taxes. It's going to make it significantly easier at the end of the year if you have those separate bank accounts, separate credit cards, for getting the information that you need to either do your taxes on your own or giving them to a tax professional.
We'll talk a little bit more about next section, we'll talk a little bit about risk management and protecting your business. But there are legal reasons you want to keep your money separate as well. And we'll touch on some of those. So yeah, those are kind of the steps I would take to start to separate what my costs are and what category they fall into. And, you know, that's the first equation, right? That's the first part of the equation of this break-even analysis, right? Break-even analysis, of course, is when costs equal revenue. And that's a great first step for a business, because it means that you're making zero money. You're no longer paying to have this business, which when you first start, a lot of times you are paying to have a business. And that's a difficult place to be in. And so that break even is your first goal. So what do I have to do to not have to pay to own a business? And of course, the other side is the sales side. And that's a whole other animal, right? Yeah, exactly. But in the beginning, you're going to be paying, you are, right? I mean, they say most businesses aren't profitable in the first year. And even if yours appears to be profitable in the first year, it's a good idea to keep that mindset. Oh, I'm being told to wrap it up. I tend to ramble. I could talk for a while. But when we're talking about, the one thing I'll say is the break-even analysis, it's easy to focus on the costs, right? And that is the most important part, because you need to have a handle on that. You need to be decreasing those costs where possible. But when we're talking about increasing sales, you need to think, am I going to have, you need to think about seasonality, and you need to think about capacity. You need to think, can I actually increase my sales? Like, is it physically possible? If I have one lawnmower and it takes me an hour to mow a lawn, then I can only mow 24 yards in a day with that lawnmower. And so that would be like a capacity of sales. Where seasonality, you know, for me personally, people buy less beer around the holidays. I don't know why, but they do. But they buy a ton of beer in the summer. So, okay, looks like I'm doing amazing in the summer, but I need to be thinking about that, right? I need to think about my business from an annual perspective, not a month by month perspective. I don't need to be thinking I'm rolling in cash because I've made a lot of money in the summer when I lose money in January because everyone is doing dry January. Nobody's drinking beer. So I need to be saving some of my July 4th money and using it to help out in January when I'm not making as much. And a lot of businesses have that element of seasonality to some degree.
When it comes to seasonality, I encourage you to like keep track of this like offline too, like make notes as you see things happening through the year. It's also a great idea to find somebody else in the similar industry and kind of get their perspective on seasonality as well. Because to Grayson's point, his brewery opened in August. So he was not able to see what seasonality was really going to look like for the first half of the year. So he kind of needed to know from an industry perspective, is this something that you all are seeing while sales decline in the winter cold months?
Yeah, exactly. Make friends in your industry.
Hey, Grayson, could you also talk about why knowing your cost, your variable costs and fixed costs is important into setting your price point for what you're doing?
I mean, absolutely, Michael. That's a great point. You know, and as a business owner, you can largely determine, you know, what your price point is, and I think, you know, that's why it's so important to separate these costs out, because another way of thinking about variable cost is your cost to make a sale. Should you charge $10 to mow a lawn that costs you $12 in gasoline? No, right? That you would, every time you made a sale, okay, great, you made $10, but you're losing $2 every time you make a sale. And that's why the categorization is so important, right? There are price points for my beer that don't make sense. And those are specific to me. Not and other breweries are different sizes. They might have a different ownership structure. They might have different revenue streams that I don't know about. I need to know what my personal costs are, and I need to know how that impacts what I should be charging so that I can work towards the break-even point and then go beyond it. And you know that, yeah. So
I'll
obviously,
also say,
go ahead.
Grayson, one of the things that I think when you were originally starting and things we talk about when we kind of do some of these other entrepreneurial conversations is make sure you're pricing yourself into the equation in your time. Even if you're not paying yourself, you know, maybe that first year as you start up, you still need to be pricing your products and services with the consideration that your time is valuable.
100%. Don't forget about don't forget about the labor.
I'm sorry. How do you go about trying to figure out your break even when it comes to dealing with like multiple services. For instance, a salon that offers nail, hair, and other services. What is the easiest way to do it? Because when, especially as a startup and determining.
Yeah. To kind of restate that question, how when your business becomes complicated and you have different revenue streams, how do you focus on how do you build a single break even for a company
Right.
like that?
Correct.
So that's a good point, and from that point, I think if we and as a brewery, we're the same way, right? Am I selling kegs? Am I selling glasses of beer? It could be packaged different ways. So for the fixed costs, luckily starting there at the fixed cost, those should be largely the same for that type of business, right? I mean, your rent it's still one building, and even if it's not, from an entity perspective, you would not just lump all costs together, right? You still want to be looking at each individual one to make sure that you're keeping a good track and not letting them snowball. But you have the classification of variable costs. From your perspective, I think you brought up a really good point. You got to think of it in terms of, instead of just fixed and variable, I would do fixed and revenue stream. So what is it? What are the variable costs associated with nails, and what are the variable costs associated with hair? To simplify what you're talking about. And so then you would have like 3 elements to track. It does get more complicated, but but that should help with the pricing point, right? You do, like you brought up a really good point. Shampoo should not be dictating how much you charge for nails, right? But it should dictate how much you charge for hair. Again, oversimplification. This isn't my industry. But yeah, keeping it tracked to that point. So another way we put variable costs sometimes is cost of goods sold or cost of sales. So if you think about it that way, when you think about, and sometimes it's a little hard. Sometimes there's cost of goods sold, and then there's overhead. So if you might have variable costs, like for example, if you had just a single cashier, right, that just rang up customers no matter what service they were buying, that would be considered overhead, right? That's still a variable cost. If you close, you don't have to pay that person. However, it wouldn't be tied to a revenue stream. So you could just classify that as overhead, and it would apply equally to everything, if that makes sense.
Grayson, will you repeat what you said? You said you could do cost of goods sold and
overhead.
Okay.
Yeah. That way, the costs. And so when you're thinking about your variable costs, and fixed assets would be an example for the most part of overhead. In a small business scenario, most fixed costs would be a form of overhead. But overhead would be split up into fixed and variable. And then any variable that are tied to a particular type of sale would be a cost of goods sold. So and I think it just takes a little bit of organization to think about, and what is your business do? And what are your revenue streams? Okay, great. It's beauty, but that could be so many things, right? That's the services you provide. That's the retail of your goods that people can pick up and purchase on the way out the door. And even the different services can be associated to different streams. So it's industry specific, and you can be as detailed as you want to be. And the more detailed you are, the easier it'll be for you to take a look at your business. And if you say, I wish we were making more money, Well, if you have things broken out that detailed, you can say, well, if you really think about it, we're not making a whole lot of money doing this particular type of service, but we're making a lot of money doing this other one. What if we just got rid of that other service and expanded the one that is making money? If you have all of these costs associated to their revenues, then you'll be able to make those types of decisions. Great
I will
question.
say though, if that detailed of a approach is overwhelming, I would suggest grouping like products, like services. So maybe you do both pedicures and manicures. Those are going to have very similar cost of goods. It's going to have very similar probably price points. So while doing them separate might give you the most detailed look into your process and into your cost and into your profit margin, those are something that you could start grouped together so that you aren't having to analyze, 10s and 20 amounts of products. You're looking at 5 or 6. Like for instance, like Grayson could look at all of his taproom sales as one versus looking at each style of beer as a separate concept. While each style does have a different cost associated to it, it might be easier, your first little bit of getting into this budgeting and looking at break even to kind of treat all taproom sales as one product.
It's exactly right. And we have done things of that nature where we started broad, and as we've gone along, we've broken things up and gotten more specific. Yeah, Mara, did we answer your question?
Yes, you did. Thank you.
Awesome. We've got a little bit to talk about. So we do have plenty of time for questions along the way, like we said. We've got 20 more minutes in this section, and Jenna's got some materials to cover around how to do a cash flow. And that might raise some more questions. But if we have any more questions on this part specifically, we could talk about those real quick, or you can type them into the chat, and we can circle back to them if we have time. Yeah, I think Jenna, you might want to just move on to the next slide. Oops. Yep, that one.
Okay, I'm gonna just quickly talk about the concept of cash flow. Please at any point put something in chat or come off of mute if you have questions. I kind of treated it as a more of a business perspective cash flow considerations than what we would truly consider it from an accounting perspective. But I genuinely love this topic, so please ask questions. I am happy to go in depth on this. It's one of my favorite things to talk about. So first, we're going to take a look at this cash conversion cycle, which consists of 3 components. You can see the first one is that a business pays for raw materials. So that's when you have to purchase things in order to either provide your service or your goods. Then we have when a business makes the product or service using those materials. And then finally, when the business sells the products or services. So you can see that whenever you purchase your raw materials, that's money going out, that's cash out. Then when you sell it, you have cash coming in. So that's a pretty basic concept. The trick here for especially you all as entrepreneurs and small business owners is knowing how long it will take to complete that cycle. So the rate of conversion in which you buy your products or buy your raw materials to make your product and service, and how quickly you then sell it. So if you have a short cycle, you sell the inventory or turn your service back into cash quickly, that puts money and cash back into your business quicker. If you have a long cash conversion cycle, you're not going to have that cash on hand, that available cash to use for your business while your inventory sits on your shelves. So this is really important because it's not just how much the things cost, but when are you paying? How quickly are you paying? When are you receiving cash back? That keeps that cash flow moving. So then we have this cash diagram, which I think is a great way to look at cash flow overall. I think it's very user-friendly and a lot better than how we look at it in a financial statement perspective. So in this diagram, you can see that the water, which is considered cash in this diagram, at the top is being created through sales and financing, which we have kind of a financing section later on in the round 2 of this. But that's coming through as that the little clouds up there creating the cash in the first place. Then that water trickles down and pulls into what they have as the available cash tank right there in the middle of that diagram. This is what's referred to as sources of cash. So ways in which you make your cash, you earn your cash. Then if we look at the remainder of the diagram, we see various uses of cash. So this is how cash is going out of your business. Specifically, if you look over on the left-hand side, you can actually see the cash conversion cycle we kind of just talked about. So you can see you have your available cash, and then that is being drained out to the left through labor, materials, direct cost associated with creating inventory or services if you're a service provider. Then once that is sold, it is actually going up through that sales pump and it is creating cash again. So you can see that if you think about it in the terms of water, which I actually genuinely like this, you're filling up your tank as more water is coming out, and then you're going to fill up your tank again. So it's just this process of receiving cash or water, using that cash to fund the creation of more cash. So in here, you can see a bunch of valves. These are decision points for uses of cash. So your decisions of what you're going to do in each of these situations determines if you have an increase or a decrease in your profitability of your business. You can see some valves are completely open. This means you have to pay them. You don't really get a choice. It's a constant drain on your cash, on that available cash. So this is kind of what Grayson talked about earlier with those fixed expenses. Like you don't really get to choose how much cash you're going to have coming out related to these expenses. Then we have some that are like partially open where you have control over those expenses. That's things like sales and general administrative. So that's your payroll. You know, Grayson talked about if your business is closed, then you're not paying your sales associates. You're not paying your employees. So you have control over that. Similarly, if you have advertising expenses, you're choosing how much cash that you are going to spend, what is going to be used to have those advertising materials. So then lastly, that brings us to what is ECFPO. So if you look at that, that's at the top right of the available cash bucket in the little shower head. And that is your excess cash flow from profitable operations. So this is the cash remaining that can become your paycheck or be used to save for like a rainy day fund in case something happens in the business, or if there's a seasonal cycle to your business. So there's this concept of a coverage gap where I think Grayson mentioned, you know, in the winter, the business for his brewery is lower, but he has very high sales in August. So that excess cash that he's producing during the summer months can be held to float lower performing months. So that way you still have the right amount of cash on hand for those fixed and variable costs, even later in the year where maybe that month in particular isn't actually keeping up with it. I see a question in here about how long does it take to complete the cycle? That is definitely a variable answer. It really is kind of up to your business itself. A lot of times services are going to have a very fast conversion cycle. So if you're performing the lawn mowing, as Grayson said, some of your costs there, your raw materials are things like your gas for your lawnmower, for your weed eater, things like that. That is going to turn into cash, hopefully by the end of the day, whenever you are paid by the consumer in that situation. You could have something that has a much longer turn cycle, like inventory. If you're making something, if you're providing a good, you probably buy, we can use Grayson's Brewery for an example here again. He buys his grains, he buys his wheat, just the yeast, all of these things that it takes to produce beer earlier than when he's actually producing it and selling it. So maybe he buys all of this stuff a month before he's even able ever to put it into the brew house or the tap room to be sold. So there you're looking at a month, maybe a 2-month conversion cycle, as opposed to if you're purchasing your gas on the way to mow somebody's lawn and you're using it and you're getting paid for that by the end of the day, that's only a day conversion. So it kind of depends on your particular model. But I think the important thing to think about here is that the goal is always to have as much cash on hand at any given time. So keep that in mind as you're looking at your cash cycle. You don't want to backlog in inventory because we talked about that long conversion cycle. That's cash you've